Hello, everyone. Some familiar faces. Good to see you. She already introduced the topic, which is artist investments. We're going to chat about what's possible, what not, where the chances, etc. First, I want to quickly introduce myself. My name is Tessy Schulz. I'm from Berlin. And I mainly work in artist management, do a lot of consultancy, producer management, etc. I'm as well on the board of the German Music Manager Association, as well on the board of EMA, which is the European thing, so on top of it. And sometimes I moderate panels or lecture at some universities, or just mingle with all you to figure out what's new. So, artist investment, why do we talk about this? Not every artist is in the wonderful position to have a huge major record deal and get advances and production budgets and marketing and have a team of 10, 20 people working for him. So many artists are struggling, first of all, as well, to make a living, because apart from money, you need to build a team, to have a promoter on board, to have someone doing the marketing or helping on social media. They need money. And first thought would be, let's go to a bank, get a loan. But, if you're a small artist, they're not giving you a loan at all. So what are the chances, apart from what we're going to talk about in a minute? You can go to, depending on your countries, to governments to have help from like Art Council in the UK or Initiative Music here in Germany. So you can apply to get some support for touring, album production, etc. You can get a profile up on platforms like Patreon, Kickstarter, GoFundMe, or however they're called. You can even press the button on Spotify to get, money, crowdfunding for yourself, for your productions. You can go to artist banks. Last year, I think I was sitting here and there was a panel. There's even an artist bank, so really focused on supporting artists. Haven't yet understood how this really works. So it's all about a loan. And what else did I forget now? I think so. There are many chances where you can apply, but mainly even if you do that, or even if you have a record label, but not, in the top league, it's not enough. So you need funding. So this is why we're here today. And we have three very different companies. We had a nice pre-talk before. So they're really acting in three different ways. And I gotta let them introduce themselves quickly, who they are and who they work for. And then we dive really deep into the three different models, because they're so different. And I would say at the end, we're gonna have a lot of time for questions. But if in between, when some of them is presenting their model or a case study, and you don't get it, can happen. Don't hesitate to ask them as well in between, that it's not forgotten. That we can really make clear, and then they can really present themselves properly, and then we all go home afterwards and know, is this interesting for me? Does it make sense or not? So let's start with Faris.
Thanks. Hi everyone, Faris from Sonomo. And Sonomo is a financial exchange for music rights. Based out of Amsterdam, and we now work with thousands of artists all around the globe. So our biggest market is not even in Europe. Small, big artists, genre agnostic. We'll talk more about the platform and our focus or lack of focus on the artist side later on. And what we do is essentially we take care of the capital side. So we allow artists to raise money independently. As an alternative to the traditional label agreements.
Jeroen.
Hello. I'm Jeroen Rehorst. I'm based in Amsterdam. I work for Armada Music's Beat Music Fund. I've been working in music over 15 years, predominantly in A&R and creative roles, also for EMI and BMG, and the last 10 years for Armada, of which the last 2 years for Beat Music Fund, our new acquisition entity.
Jan, please.
Hello, first of all, thank you, Weiss, for having us. It's a great opportunity. It's a home play for us. We are from Berlin, 12 by 12. I keep it very short. We are a music financing platform. What we are doing basically is making music bankable. We can price it, and we actually can offer advances without touching any rights. So that's actually our value proposition to the artist or the rights holder at all. We are totally genre agnostic, size agnostic, so we actually can advance or fund basically everything. And the rights holder at the end keeps his rights and doesn't enter into a so-called bad equity deal in the end.
So now you know everything. Any questions? No. Now we go a bit deeper into this. I think we, if okay, start with Faris. Sonomo, because what I learned when I, studied the website, the platform, it's like interesting for two different groups in this world. So investors and artists. So you as well, everyone here in the room can become rich, applying on Sonomo. You can get shares and da-da-da. But he will explain this much better than I could. So if you could guide us through the two different sides, how can I become an investor? What sense does it make? What potential is in there? And then as well, how do you get the artists on that platform?
Right. So when we first started the company 5 years ago, we, it came out of the idea of just making music investable, which I think a lot of people had, and but how we ended up doing it is we said, hey, there's some people in the world that have excess capital, and they want to put that capital to work, and music is a perfect asset class because it generates income, right? So if you're an artist, you have let's say a back catalog that's generating, I don't know, a couple of thousand a month. You still can't get a mortgage, right? Like you said, you go to the bank and the bank is like, I need to see some pay slips. What is that? So we're like, okay, we can, there's the capital that wants to get a return. There are the artists that need financing. They need to be banked just like anybody else and need to have financial independence. And so we created the platform just for that. So on the artist side, we work from very small artists. So the track with the smallest valuation on the platform is 10 euros, which is really like micro, hardly anybody listens to it probably. That's why it's valued so low. All the way to 100, I think the most valuable one is like 150,000 euros, 120,000 euros, depending on the day. It keeps trading in the price. So that's on the artist side, genre agnostic. Our biggest market is actually South Africa. So the kind of the disconnect that I was talking about actually gets bigger when you're talking about places outside of Europe. There are a lot of places where there's great music being made and even the record labels aren't there, So we make more of an impact in those markets. The money side, so the investor side, is really purely financially motivated people. These are not fans of the artists, right? And
can be fans too.
Could be, of course. But I think that for platforms that were focused more on like fans supporting the artists weren't able to unlock meaningful capital for the smaller artists, because then you get into this chicken or the egg problem. You're like, you don't have fans yet. So how are you going to raise money? Like, how are you going to advance in your career? So we have like, anything. We have artists that are obviously quite famous, but then we also have a guy that makes music for cats on Spotify, and people back him because it makes money. Yeah, so.
I'm not commenting this.
Yeah, that's...
Okay, two questions, because I really already tried out a few things on your platform. By the way, are there any artists in the room? 5 to 6, okay. Any managers? Okay. If I'm an artist or a manager representing the artist, and if I want to join Sonomo, how does that work?
Right, so it's actually quite simple. We have you get in touch with me, or I can do that for you. I can put you in touch with our team. Basically what we do is we give you free distribution. You don't have to sell any of your shares in your music or anything like that. So we do all of the distribution, all of the royalty accounting for you.
Via whom you distribute?
Aggregation. So we have a partnership with Fuga, and our technology is built on top of theirs. But you get a completely, we don't take any share of the royalties or any And that's, once it's distributed, then you have immediate real-time access to capital. So you can literally push a button and you get money into your wallet and you can withdraw it. In that second, you're already plugged into the platform. Of course, you can move your back catalog as well, so it's not only for new releases. We essentially provide, the distribution layer is a lot of the, kind of like what labels usually do, but we don't do it as a business model. That's not our business model, so we do it for free for the labels and artists that work with us.
And you can withdraw money anytime or once a month, or
within Europe,
when
it's
there's something there.
within Europe, it's unlimited withdrawals, minimum of 10 euros at any time, goes into your bank account. So
and then for the, is there, because I'm an artist manager and as well I represent artists, and they always ask me then all the detailed question. So if I then, you have your song up there, and 10 of us here in the room invest in that track. You can see different shares and blah, and how much you want to invest. And then how does this transfer to the artist making money?
Yeah, so, so basically, let's say you have a track that's making 10 euros a month from Spotify or something. So, let's say investors might value that track, depending on how the market values it, at 1,000 euros, right? So like a 10% yield or something like that. And you sell 10% of your shares, so you will get, immediately you will get 100 euros, right? Because people buy that. But then when you get the royalties, you only get 90% of your royalties every month, because you already sold the 10%, so the investors get the 10%. It's essentially selling your future revenues to get money now. And
when do you reach the point that you can, when you say, okay, now I made enough money, or I even got signed to Universal or whoever, I don't need this anymore? How does that work?
I don't think that it's either or. I think it depends, because the label agreements are inherently very different in nature. Usually labels would buy things that you haven't even made yet, while we only work with back catalog, right? I mean, not all labels, but so you're selling something that's already been out for 2, 3, 4, 5 years, and you want to get shareholders and you want to get money. While when you get signed with Universal, they also get some maybe creatively involved. They might even get involved with, like, today.
Yeah, I think your combination won't work. Therefore, I think you end it, or you leave your catalog there and just future releases.
We have artists that use us and are also signed to majors in different albums or different releases. So.
Okay, so sorry anyway for going really into this, but these are the questions. So let's, I would love to go on with Jan then, to have a good mix of scenarios.
I mean, everything, Faris, what you said is totally right. I think let me start a little bit earlier on the problem of the music industry itself, and it's not only like small artists. It basically goes through all different kind of stages up to the majors in the end. I think it's a little bit the topic of lack of liquidity and access to capital. Most of other industries comparable to the music industries have other possibilities to access capital. And on the other hand, the whole revenue streams changed over the years. So with 80% coming out of streaming revenues, you basically have the revenue generating over quite some time, and not these peak incomes like you had it when you sold analog or even have downloads. And that reason basically comes to the point that most of the artists, our rights holders, have actually problems to get growth capital, and you need capital in the end to grow and to become better in case of buying instruments, doing tours, doing marketing, and whatsoever. And that capital issue you have is still monopolized. It's one of the biggest monopoles the bigger major companies or distributors actually have. And I wouldn't say it's a negative thing, but they kind of obviously also use it to increase market shares and cut deals in not only selling administrative topics, but also acquiring rights. And if you compare it with the startup, a little like a musician as a startup, and you go out and you believe in yourself, what you're doing, then you would now normally rather take a credit loan than actually do an equity deal. Because if you do an equity deal, it's the most expensive money you do. Because if you imagine you become successful in the future, obviously, the 10, 15, or 20, or 40% you actually gave away of your asset you produced is pretty expensive compared to a loan that you actually pay back and then pay an interest on it. And I think this is the biggest issue and the problem in the industry. And it doesn't even scope only for, or works only for smaller artists. It also is totally applied for, let's say, independent publishing companies, independent labels that actually starting, they're doing a lot of effort, but they need the capital. So what they do is basically they go one step higher. They close co-edition contracts, the co-label, sub-label contracts, and in these contracts they actually normally give away a big portion of the rights just to acquire and get the capital, or they do JVs or whatever. There are all sorts of different kind of structures. And this is what we actually were thinking, this is the disruptive element you can tackle. So what you actually need for that, you need to find another investor base that is actually able to invest into something that is not only like in equity, but cash flows, so that you actually do kind of a loan, you advance money, you take an interest on it or costs on it that actually needs to provide the capital. But in the end, if it's recouped, everything falls back to the artist again. So he actually has the possibility to get finance without giving up his rights. And I think that's a very important message. And that's what we are doing. So we have, and to acquire capital, it's always a risk reward. So the more unsecure the investor is on the outcome, what this asset is gonna produce, which is super difficult for most of it, because I mean, music is a perfect asset, but it's still difficult to price. So the higher are the capital costs, because the more risk he takes, the more gain he wants to make. So if you actually have a price, you're coming down with a very high cut, you actually can lower the capital cost and bring out an advance with a low cost price on it. And I think this is what we are doing. So in the end, we pay out advances that can be recouped. The artist or the rights holder keeps his rights. We are not in the competition with selling and trading catalog transactions. That's not what we are doing. So we are not obviously able to pay out these multiples in the end, but we are coming pretty close with the financial products we built in the back end to refinance the purchase prices, and therefore providing a rights holder or any kind of catalog. I mean, we see the artist, but it's in the end the asset we price to provide him capital to do what he actually wants to do. And on a side note, I think what's also important is he's completely free to decide what he's going to do. He can go to any kind of distribution company, he can sign label deals, he can even sell his catalog in between. Obviously, he has to pay out the advanced amount, but still, we kind of more trying not to interfere into that specific environment where others are much better than we are.
Okay, so first of all, what kind of rights you pay in advance on? Because I remember when a year ago I talked to you, colleagues of yours, it was mainly on the publishing side, but I heard something changed. Am I right or wrong?
No, you're right. So we started with the publishing rights. There's a reason behind it, because obviously publishing rights, everybody who knows a little bit about pricing, the publishing rights are much better to price. And that was our market entry so far. But now we increased obviously to sound recording master rights, which we can advance. So basically, in the end, anything which has to do something with music and is generating money in the end.
So you could choose, like, I just want to, work with you on the publishing side, or on the master side, or on both.
It's on both sides. So we can, I mean, for example, if an artist has signed a deal with if a composer or has signed a deal with a publishing company, and you just look at the artist share, we can advance that one. It also can be the publishing company advancing on the publishing company share. We can do sound recordings on the side of the digital distributor. We can pick out one distributor. We can take out GVL, for example. So we can do flow-throughs. So, for example, if somebody doesn't want to basically advance his whole amount so that he in the end has some cash to run business or operate, so we can operate on flow-throughs, and it's pretty agnostic how we actually can settle the advance.
And to bring in a little bit AI, as the panel was announced, I think we are we have less AI than any other panels at the WISE conference, but I think we're coming to you in a second, Jeroen. It just came to my mind. So when you, in your case, 12 by 12, when an artist comes to you and said, okay, I need money and this is my catalog and da-da-da, and then you say, and then I think you predict some future happenings because you need a kind of a base to start a calculation, how much can we loan, what we think, when it will come back, etc. So are you using AI for this?
I mean, sure. I mean, we use AI through the whole layers of our company, and I think it's just like, I mean, everybody does it. Who's not doing it right now is just like he missed the train some time ago. But no, obviously on the prediction side, on the pricing side, we use different kind of AI tools. We use it for due diligence purposes on the legal side. So we have a pretty robust model where we can very quickly green light or red light different kind of artist groups. So because obviously we're looking at the long tail going in, and due diligence costs a lot of money, a lot of lawyers, a lot of whatsoever. And these are the specific fields where we utilize the full power of AI.
And I think with Faris we heard, okay, the artist immediately gets money as soon as some investors put, some money on it and buy some shares. And on 12 by 12, so because I'm sure artists will have that question. Okay, I start negotiation with you guys. When will I get the money? How fast do I get this loan? Because I need it now. I need to go on tour. So how long does it roundabout takes?
Yeah, so I can give you some numbers. So the fastest payout we did was 3 weeks. The longest was roughly about 3 months. But that depends a little bit on the question, like on deal negotiation and all these kind of stuff, or not negotiation, but there are a lot of follow-up questions, obviously, from the artist side. And from a deal term size, you can say like the lowest amount we paid out was roughly about 20,000 euros, something like that, and the biggest one was 2.6 million. So that's the average.
So that already answers my last question. Are you working with artists of every size? So.
Yeah, exactly, and that's what I'm trying to. I mean, you always see the artist. Obviously, this is the source of the creation, but in the end, the asset he produced, this is what actually should be looked at, and this is in between, like this risk-reward topic. If you look at a person, what happens if the person is not existing anymore? If he's doing whatever all of these fears you might have as an investor, this can't happen normally to the asset below of it.
Wonderful, thank you. And now, Jeroen, Armada Beat Fund, another very different model, please.
So our model actually also got set up out of a little bit of a necessity. The whole investment thing became a little bit undeniable. Armada, as a label, we've always invested in catalog, but more, let's say, acquiring labels that went defunct or stopped releasing at some point. So we already built like a 40,000 master catalog over the years. But now with investors, private equity coming in, also approaching our artists, asking like, hey, we want to buy your rights. And Armada has always been very involved in setting up long-term relationships. So we had one of our artists, in which we already had like a 10-year partnership, got approached by such a company, and we got offered a seat at the table. But there's and we could probably also pay the number that was asked for the catalog. But there's so much you can do. And withdraw money from your own company. So we figured like, okay, we need to adapt to this, and we need to set up something in order to also protect our own rights a little bit. Then our Beat Music Fund got launched, and unlike the name, it's not like a fund where external investors can have a say in or invest money in. We're 100% self-owned, so that was really important for us. But we do offer, money for catalogs, and have been very active in the market, but only within our niche, so within dance music. And we really cautiously thought about that, played to our strengths. And I think the selling point is that we have a label and that we can put the music back into the market and that we have a reputation within dance music and can treat the music and the assets in a very good way and re-exploit it in the best possible way as well.
So, what we just learned, first of all, they're specialized in their genre where the expertise lies, so it's electronic dance, everything what Armada is famous for. They mainly buy catalog, so we already discussed this beforehand. So you buy then, well, we're talking about master rights, right? Not publishing.
Everything.
Everything.
Yeah.
So, but the question, but I could as well just sell you my master rights 100% and keep the publishing.
Yeah.
Yeah. Good. Yeah. Just to know what's possible.
Yeah.
And
basically every possible income stream we can buy. So naming rights, publishing rights, producer points.
At always 100%. So you're not doing shares anymore.
Well. It was a little trial and error because initially when we came into the market we just bought everything that was available, but then we learned that the big advantage is that we buy a little bit control in a record and prefer to buy 100% rights because then we can actively work it, and that's actually where the gain is for us.
And I think what makes you as well different to the other two. So if I'm an electronic artist and I send you my whole catalog, the master rights, and I get an amazing amount of money on this, then you think, but then the rights are gone. I don't even have a little 10% of it, so there's no more income coming from this catalog. But I think especially with Armada owning it, my next... and they have the expertise in the field of electronic and dance. So on my future releases, depending on how good you work, the catalog will give as well a push or establish as well a higher monthly listeners on Spotify because you work properly on the catalog, you reactivate it, or you even do collaborations or different versions, or I don't know, because you own it and you want to make money with it as much as you can. And I think this gives then, in my expectations then as well another push on everything I do in the future. So this is another upside. Or
correct.
Am I dreaming?
No, absolutely. I think the feedback we had from a couple of our earlier deals. So, for instance, we did one with Kevin Saunderson, including the rights to Inner City, big tracks, big fun, and good life. We bought a label and we've been actively working it while they still maintain an active artist career and put out new music. So we can be obviously partners in the new music. So it could also be like a hybrid deal. Sometimes we do that, like, hey, we buy the catalog and work on the future music at the same time. But in this particular case, the feedback he gave to us said like, I'm so happy that you guys are pushing this because I also see the benefit on my frontline releases because the profile is growing, my monthly listeners are growing, and I also see that the streams or let's say the entry level of the new releases are well positioned and getting better.
So I think ideally as well, for sure, they sign a future deal as well with Armada. So that's great
sometimes
for Armada.
Happens, sometimes
no, but as well for
a
non-Armada artist as well, it gives you then the freedom because you got the money from selling your catalog to work on new projects, to work on a new album, to work with the producers you always dreamt of, or to travel the world where you're not yet making money to build a base, etc. So I think it's quite as well a very interesting model. If you're in the electronic dance scene, don't reach out to him if you're doing heavy metal or I don't know. Probably they're open. No. So I think we already answered that many questions. Anything else? I already talked about limitations, size.
Maybe I can add something because I think it's also super important to that the music industry has all sorts of financing models because I mean this makes it like any artist or rights holder is in a different stage and not every financing model fits or fulfills the need that they actually have and we obviously have very often rights holders that eventually want to sell, then they don't sell, but some of them also sell. And I think this is the freedom of choice, because sometimes the artist doesn't want to, he wants to not to get rid of his catalog, but he wants to step out, or he's in a differently living phase. And I think that's super important. What I think is wrong, if you have this monopoly on financing in the end, and that's like basically what I find super great, what I can see. I mean, there are different kind of players in the market, like Beatbread, they're doing a great job over there in the US, or Duetti, or you name it. There are some of the really great companies out there, and you see that this place of financing basically is now, there is coming a movement in. And when I started doing this, I was always thinking, why are not banks doing this? Why don't you have an artist bank? And the answer is pretty simple, because the market is too small. I mean, even if you think it's like a $40 billion market, but it's still like for the traditional banks, it's a small market in the end. And that's why they don't open up for it. And if big players are not coming in, that always leads to the fact that you have obviously intransparent private equity companies coming in, doing the multiple arbitrage. It's like, there's a lot of things going on. They say like, I run a catalog better than it is, look at Hypnosis, what they did. So I think what you are doing, the model that you are doing, like having a running label behind it that really can provide the efficiency and the power to actually run a catalog in the right manner, that's, I think, a great way. And it is also a part of freedom of choice in the end for the artist.
I completely agree. Sorry, you wanted to add something?
Oh, thank you.
No, I definitely agree, because, and that's why I was as well interested when I got asked to moderate this panel. And then I think, okay, they're all gonna offer the same, so it will all be the same. You know, that's what I mainly did know about this. And then getting deeper into these three companies, I'm like, wow, they're so different. And as Jan just said, depending on what stage you are, I need now a big amount because I have to buy my mom a house, or I want to do that and that.
Divorce my wife. Divorce my wife.
Divorce your wife, for example. No matter, there's so many situations in your life, and so this says, well, then I want some extra income. I want a big amount of money. I want a loan, but then afterwards I do everything myself again when it's paid back, etc. So, or selling just shares or bits and pieces. I think this is so there's almost already something for everyone. So I think we already covered the three scenarios and a little bit more. Are there any questions in this room? I think we were too good. We already answered all questions. Okay. That's really surprising. I never had this. Because you just mentioned as well, there's the Beatbreads and several other companies around. Anything in your, starting with 12 by 12, anything in your company that makes you stand out, or where you are already even better than competitors who offer kind of the same?
Everything. No, I'm just, that's, yeah, as I said, I think it's sometimes comparing apples with peaches or whatever, something different. So I think it's like what makes it really great. We have two USPs. One is the pricing that allows us to refinancing the advances on a very low, also the capital we are taking in is on a very low price, so we actually can make a very good offer for a eventually unsecured loan in the end. It's not a loan, but you can compare it with that. And I think the other part is especially for rights holder, like in the middle of their phase of growing, where they already see that they are doing something right and good, that they can keep the rights and they're full of control of their rights. I mean, there's a reason why catalogs are a business out there. It's because it's a good investment in the end if you pick it at the right price point. And I think that these are two things that I haven't seen so far by others.
If you work it properly, as Armada Beatfund does. So if they work the catalog well, otherwise it's a nightmare for investors, I would say. and we've seen examples.
Yeah, exactly. I mean, as I said, like I mean, some rights holders come to us and say, like, yeah, okay, it's a nice offer, but it's not enough for me right now, and I want to actually sell it. And we basically are always happy to then forward it to the different players in the market. But I think it's super important on that side, and that's why I pointed it out, not to make a compliment. It's super important. Most of the private equity companies going out there, they are saying, I'm doing a better job than the people did before. And that's straight away, I would say, not a lie, but that's wrong. Normally, most of the players in the market, they do something right and they do it good. And it's always a bigger effort to basically take something out and put it in another environment than keep it there where it is.
We had one question here, Mr. Feldman.
Yes. So my question goes to 1212 at Jan. So what do you think, from the calculations, what percentage you pick for your own, or for the company 1212, if you get the whole thing for 10 years? So what is it, like the publishing companies take between 30% or 40%, depends on the deals, but what is your deal from the percentage?
So we have roughly about, I mean, you really can't put it like everything over, but it's something between 8 and 10% roughly, and but that again stands a advance that is basically only secured by the future cash flows. So if you as an artist or rights holder are going in, you never have like kind of that private liability. So it's basically it's not a loan, but it's a purchase agreement for future cash flows, but that's the average price.
And when do you will offer this, not just for publishing, also for master rights or whatever? Because the website
exactly.
is still just publishing.
Yeah, we started with publishing. We started in Germany. That's our home area. I wouldn't say we started in Berlin, but that's where we started. That's how we actually did our first bond or fund, how we structured it. And now we opened up in the second one to recorded rights, master rights, however you want to call it. And now we obviously, and now the next thing we are doing is like looking at at other interesting markets out there from a regional perspective.
Faris, as your company is very different, and the way you do it, anything outstanding you offer others who are doing as well this double thing? Tell us.
Yeah, I think, so we talked a little bit about equity versus debt and loan models, like what 12 by 12 does, and more like equity-oriented models, like the Beat Fund and Sonomo. And I think when we started the company, I don't come from the music industry, so we just looked at how the music industry is structured, and we built a financial model, a model that works financially for it, rather than perpetuating because I think the debt models are more traditionally used in the music industry. And the problem in the music industry is that you have this massive long tail of artists that are not making money. Okay, so Spotify democratized the consumption of music, distributing music, that sort of thing. That's all been democratized. But the problem is visibility now, and you have this massive long tail of artists that are not making money. They're not making enough money. 99.9% of the market, I would maybe, Jan can hold me to say I'm wrong, but I think is not big enough as an artist to get a loan, to get an advance. Because simply for investors, they're like, you're way too risky. Or, I'll give you an advance for 10 euros or like 20, but I can't underwrite a bigger advance. And so that is the problem that we saw in the music industry. And that, by the way, that's not specific to the music industry. Like, there's a reason why venture capital funds, when they invest in startups, they want to do equity because they're like, I want to have enough upside. Like, fine, I'll take the risk, but where's my upside in this equity? So that's why we structured it in that way, because that is the only way. Equity is really the only way that you can finance the middle class and the lower class. I would maybe not the great name to describe them, but of artists. So if you that is the only way that you can unlock meaningful capital for artists everywhere around the world, and that investors would be willing to deploy that money. Otherwise, investors will come in with a lot of, they want that security, so they'd probably be like, hey, okay, we'll give you this loan, but we want to recoup it from your entire catalog, right? Because, so you're not going to be seeing any income, let's say, for the next 10 years. Whereas with an equity model, you can probably come in and sell one track, like a single to the beat fund, or even do partials. On Sonomo, you can sell like 30% of a single track, so you have a lot more granularity. But I agree that the bigger you grow as an artist, the more optionality you have, so then you can start going to like the Beatbread 12 by 12, you can maybe majors start to give you agreements. And the more optionality you have, the more financing channels that you expose yourself to, the more leverage you have in each of those, right? So you can go to Universal and be like, I got an offer from 12 by 12, I got a, I have this much on Sonomo, whatever, and you can negotiate and know what
definitely
you have.
You have to beat it with something extra, not just taking a huge percentage of my rights and giving even less money than I would get from you guys. Jeroen, any last words? I think we have to finish soon.
Pressure. Yeah, I think the most important thing for us is, what I've learned in this whole process is that, a lot of artists have specific reasons to offload their catalog. It can be somebody, who wants to buy a house, or, is thinking of he wants an advance on his future revenue for his pension. He doesn't want to, offload all the responsibilities of accounting to his kids. But it could also be younger artists who just wants to extract value from the current catalog and invest it in a studio to make new catalog. I think for us, culturally, it's important, to also do preservation. I think that's also sometimes a little bit, what we feel is really important. So if we have the opportunity to buy a catalog, recently we did a legacy 90s house label, King Street Sounds. And we relaunched it actually with like new visual identity. We did, together with Beatport, which is a DJ download platform, we did a documentary, really telling the untold story of the label. Again, we use catalog also to run frontline campaigns and also, put a spotlight on the assets. So that's it.
Brilliant. Thank you very much. I think we are now right on time and have to leave stage for the next ones. Thank you very much for listening. Thanks, my guests here, for presenting. And thanks, Wise, for having us.
Thank you, Tessy.